Welcome back to Malaysia Money Matters. It's February 21st, 2025, and we've got a lot to get through today, from company updates that could directly impact your portfolio to international developments with potential ripple effects right here in Malaysia. Let's dive into the financial happenings that matter most to you.
Sounds good. Where should we start?
Let's start with company news right here in Malaysia. It's been a real mixed bag for banks this quarter. Ambank saw profits dip a bit, higher operating costs, and a decrease in Islamic banking income, but their net interest income, what they earn on loans and what they pay on deposits, that's actually up. They seem to be taking a long-term approach, even if it means weathering some short-term fluctuations.
That's interesting. It kind of contrasts with CIMB Niaga, CIMB Group's Indonesian subsidiary. They're celebrating a 5.4% profit increase, what they're calling a robust strategic plan and strong asset quality. This begs the question, are these differing strategies a reflection of the banks themselves, or are there broader economic forces at play?
That's a great point. It'll be interesting to see how these different approaches pan out over the next year. Now, let's shift gears to the tech sector, specifically semiconductors. Datasonic Group is riding high on a wave of demand for passports and smart cards, profits soaring by a whopping 64%. Okay. But Inari Amertron, another key player, paints a slightly different picture.
Right. Their profits increased, but revenue actually dipped, which they offset through savvy forex management. Essentially managing the risks associated with currency fluctuations, they're cautiously optimistic about the future, but understandably concerned about the impact of potential U.S. tariffs, which could disrupt global trade and supply chains.
And that same cloud of uncertainty hangs over MPI, who are banking on the artificial intelligence boom to offset slowdowns in other areas. They have a solid balance sheet and exciting new investments, but
Yeah.
those tariffs could throw a wrench in the works.
So, is the tech sector in Malaysia a safe haven for investors? Or is
Yep.
caution warranted? It's a question a lot of people are asking. While tech certainly holds immense potential, it's crucial to consider these global factors that can sway even the most promising sectors. Diversifying your investments across different sectors, and even geographically, can help mitigate those risks.
Solid advice. Speaking of diversification, let's look at the energy sector. We see contrasting fortunes playing out between traditional energy sources and the push towards sustainability. Dayang Enterprise, an oil and gas services provider, saw profits fall due to forex losses, but still hit a record high for the full year.
They're anticipating robust activity in the sector, fueled by stable crude oil prices, which suggests that even in a world increasingly focused on renewables, traditional energy sources are far from obsolete.
And yet the rise of renewables is undeniable. SolarVest Holdings, a clean energy company, is celebrating record profits driven by large-scale solar projects, and they're venturing into battery energy storage systems, a key piece of the renewable energy puzzle. Even Genki is going green, expanding their aquaculture solar farm in China.
This highlights a crucial trend for investors to consider: the transition to sustainable energy. While it's a gradual process, companies successfully navigating this shift are likely to reap significant rewards in the long run. It's a space to watch closely.
Absolutely. Now, let's zoom in on some other sectors showcasing a diverse range of performance. Dutch Lady Milk Industries saw profits climb, but warned of a potential cost increases due to supply chain issues and regulatory changes. Malayan Cement echoed that sentiment, celebrating a profit jump while remaining cautious due to inflationary pressure.
These examples illustrate how external factors can significantly impact a company's profitability. Understanding the interplay of these forces, inflation, supply chain disruptions, regulatory changes, is key for investors.
Then there's Kasan Rubber Industries, whose profits surged thanks to the absence of a one-off impairment charge, a sign that they're bouncing back from previous setbacks. They're even positioning themselves to benefit from potential demand shifts caused by those U.S. tariffs on Chinese-made gloves.
This underscores how global events like trade wars can create unexpected opportunities for certain companies. It's a reminder that even in seemingly turbulent times, astute businesses can find ways to adapt and even thrive.
But it's not sunshine and roses for everyone. Berjaya Food, the folks behind Starbucks here in Malaysia, continue to face headwinds due to the anti-Israel boycott. They're working on strategies to navigate this tricky situation, but it's certainly a reminder that consumer sentiment and social factors can significantly impact a company's performance.
It's a lesson in the importance of considering not just financial metrics, but also reputational and social risks when evaluating a company's prospects, especially in today's hyper-connected world.
Now for some good news. Pekka Group, a car upholstery maker, hit record profits despite lower revenue,
Yeah.
a feat they achieved through cost efficiency measures. They're also expanding into new markets, demonstrating a proactive approach to growth. And Petronas Tegangan is celebrating higher profits, even declaring a special dividend for their investors.
These examples showcase the importance of sound operational efficiency and strategic planning. Companies that manage costs effectively and adapt to changing market conditions are better positioned to navigate economic uncertainties and capitalize on emerging opportunities.
Exactly. And there are more bright spots. Sunway Construction Group declared their highest dividend payout ever after a record-breaking year, fueled by opportunities in advanced technology facilities and government projects. Sunview Group also snagged a contract to build a solar PV facility at University Malaysia Sabah, illustrating the growing commitment to renewable energy in the country.
These are encouraging signs for the Malaysian economy. Investments in infrastructure, renewable energy, and advanced technology can drive long-term growth and create jobs, potentially benefiting both companies and investors.
It's exciting to see these developments unfolding. And there are a couple other noteworthy updates. OMSD's 49% owned unit secured a contract to upgrade the e-court system, which hints at modernization efforts within the country. UEM Sunrise, meanwhile, is aiming to accelerate growth after exceeding their 2024 targets, with plans to develop projects worth a hefty RM2 billion this year.
These are all positive indicators for the Malaysian economy, suggesting confidence in the future and a willingness to invest in growth. It'll be interesting to see how these initiatives translate into tangible economic performance in the months ahead.
And speaking of the future, let's talk about what's happening in the property market. The Association of Valuers Property Managers, Estate Agents, and Property Consultants, or PEPS for short, predicts a 2% to 5% rise in property prices this year. They attribute this to strong domestic demand and those ever-increasing construction costs. So, is now the time to jump into the Malaysian property market, or is it wiser to wait and see?
That's a question only you can answer, based on your individual financial goals, risk tolerance, and investment timeline. However, PAPI's prediction suggests the Malaysian property market is expected to remain relatively stable, which could be enticing for those considering this avenue. But remember, thorough research and due diligence are crucial before making any investment decisions.
Sound advice.
Oh.
Let's shift our focus to international and political news, where things are getting a bit heated. Remember the U.S.-China trade war we touched on earlier? Well, it seems to be back in the spotlight. President Trump has hinted at the possibility of a new trade deal with China. But he's also announced plans for new tariffs on a wide range of goods, including lumber, cars, semiconductors, and even pharmaceuticals.
This is creating a wave of uncertainty across global markets, and the potential impact on Malaysian businesses and your investments is significant. Semiconductors in particular are a key sector for Malaysia, so any tariffs in that area could ripple throughout the economy.
It's a bit of a global economic chess game right now, with everyone trying to anticipate the next move. And speaking of reactions, the yen is rising due to speculation that the Bank of Japan might raise interest rates to counter any negative effects from this trade war.
This highlights the interconnectedness of the global economy. Events happening on one side of the world can have significant consequences for other economies, including Malaysia. It's a complex web we're all navigating, and understanding these global currents is essential for making informed investment decisions.
You're absolutely right. And speaking of navigating complex situations, let's look at some global economic trends. European bank stocks are enjoying their best winning streak since 1997, driven by rising interest rates and share buyback programs. But even amidst this celebration, concerns linger about the potential fallout from those U.S. tariff policies, particularly on the semiconductor industry.
It's a classic case of good news, bad news. While certain sectors are experiencing a boom, it's important to consider the potential downsides and how they might impact the overall economic landscape.
And it's not just Europe feeling the heat. Indonesia's current account deficit is widening, and they're projecting an even larger gap in 2025. Meanwhile, the U.S. is cutting its diplomatic mission in China by up to 10%, adding another layer of tension to the already strained U.S.-China relationship. And back in the U.S., jobless claims ticked up slightly, though they remain in line with pre-COVID levels.
It's a lot to process, but this is the reality of the global economy. A constant flux of interconnected events that can sway markets and impact your investments. Keeping abreast of these trends, even those seemingly distant, can provide valuable insights and help you anticipate potential risks and opportunities.
Now let's circle back to Malaysia and delve into something particularly intriguing, the world of hedge funds. It seems they're making some calculated bets on Chinese stocks, hedging their risks in a way that could benefit them regardless of how the U.S.-China trade war unfolds.
It's a fascinating strategy. They're essentially wagering on two potential outcomes. If a trade deal between Beijing and Trump materializes, Chinese stocks could surge. On the other hand, if the trade war escalates and the rest of the world aligns with China against the US, those same Chinese stocks could still see gains as global investors see alternatives to the American market.
So they're playing both sides of the field. Sounds like a clever way to manage risk, but is it really that straightforward?
Well, it's not without its challenges. China's economy is grappling with its own set of hurdles, including a real estate crisis and high debt levels. These hedge funds are treading cautiously, exploring low-risk options like call options, contracts that give them the right but not the obligation to buy a stock at a specific price. They're also focusing on undervalued stocks in specific sectors, seeking hidden gems with growth potential.
So they're not going all in on China, but they're definitely keeping a close eye on it. It's almost like a strategic side bet in addition to their main investments.
Precisely. It underscores the importance of diversification not only across different sectors, but also across geographical regions. Anticipating potential shifts in the global economic landscape and strategically positioning yourself is crucial for navigating today's investment world.
It's like playing chess with the global economy. But what does all this mean for the everyday Malaysian investor like you and me?
Yeah.
Should we be rushing out to buy Chinese stocks?
Not necessarily. Every investment decision should be tailored to your specific financial goals, risk tolerance, and investment horizon. But the key takeaway here is that understanding global trends, like the US-China trade war, and the strategic moves of major players like hedge funds, can provide valuable insights and broaden your investment perspective.
It's like getting a glimpse behind the curtain of the global financial market. And sometimes that glimpse can reveal surprising strategies and potential profits.
Indeed. It's about staying informed, remaining curious, and always seeking to expand your knowledge.
Now let's bring it all back home. Today we explored a range of Malaysian companies, from banks to tech giants, energy providers to consumer goods companies. We also dove into the intricacies of international trade, global economic trends, and even the strategic plays of hedge funds. Phew, that's a lot of information.
It is, but I think there's some key takeaways that stand out. First and foremost, diversification is more critical than ever. Spreading your investments across different sectors, asset classes, and even geographical regions can help mitigate risk and potentially increase your chances of success.
You're right. Don't put all your eggs in one basket. And second, staying informed is crucial. The global economic landscape is constantly evolving, and understanding these changes can empower you to make better investment decisions.
Absolutely. Read financial news, listen to podcasts like this one, and don't hesitate to ask questions. Knowledge is power, especially when managing your hard-earned money.
And third, be adaptable. What worked yesterday might not work tomorrow. The companies and investment strategies that thrive are those that can pivot and adapt to changing conditions.
Flexibility is key. This dynamic world demands that we stay agile and ready to adjust our approach.
So as we wrap up our deep dive into the financial news for today, what stood out to you as the most exciting or thought-provoking piece of news?
For me, it has to be the news about Yinson Holdings completing their largest floating production storage and offloading vessel, the Agogo FPSO, a full 3 months ahead of schedule. This is an incredible feat of engineering and project management and speaks volumes about the capabilities of Malaysian companies on a global stage.
I agree. And the fact that they're incorporating cutting-edge carbon reduction technologies, like the first ever pilot of a post-combustion carbon capture system on an FPSO, is truly remarkable. It shows a commitment to sustainability and responsible energy production.
It's a shining example of Malaysian innovation and leadership in the global energy transition. They're not just building massive vessels, they're building them with the future in mind.
It's definitely something to be proud of, and highlights Malaysia's vital role in shaping the future of the global energy industry.
It's a reminder that even amidst challenges like trade wars and economic uncertainties, there are companies and individuals striving to make a positive impact.
Absolutely. It's those stories of innovation, resilience, and progress that give us hope for the future. And those are the kinds of stories we love to share here on the Malaysia Money Matters show. So if you want to stay informed and inspired, make sure to subscribe to our podcast for your regular dose of financial insights and analysis.
We'll be back next time with more deep dives into the financial world, helping you navigate the complexities and seize the opportunities that come your way. Until then, keep learning, keep exploring, and remember, knowledge is your best investment.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at mmoneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.